Yo, what's up, everybody? How y'all doing? Devin Bad T's back at you. Black Diamond FX in a building. And tonight, I am looking over, just to kind of see what we can find, see what kind of trades we can find. So, of course, I like to start off on the high time frame, looking at the DXY, see what's going on with the Dixie, which is the dollar index, if you guys don't know. And looking at this, I would say the Dixie is overall in a downtrend. All right. And why do I say we're in a downtrend? You can see we have our last break of structure right over here, created the high, came down and broke this low, gave us that change of character. Okay. Now price also came back up. All right. And I want you guys to look at this. It came back up. It did not violate this previous high right here. What happened was it respected this order block right here. You can see it right there. And if I drag it over, boom, y'all see that? All right, so that confirmed our once we got our rejection and started coming down, that confirmed that we're, currently in the downtrend. The dollar is headed downward. Okay, so then what happened? It started coming down and we got our break of structure right here. Now this is the 4-hour chart. All right. And what happens is, what you want to notice is a lot of times price is going to break structure, go back up into the range, look to mitigate an area of liquidity. Now, areas of liquidity, when it goes back inside of the range, like this is doing right here, is looking for inside of the range, internal liquidity. And internal liquidity areas could be areas like equal highs, equal lows, but fair value gaps, order blocks, such and such. All right. Now, when you see it break of structure like that, that's external liquidity. Because, say, for instance, we were coming from here down to here. All right. Now, this was our range from here to here. Liquidity, we already know we have liquidity at the lows and we have liquidity at the highs. So once it breaks the low, that's targeting external liquidity, liquidity that lies outside of the range. And that's what we got here. Okay. And the fact that we kept on getting those, excuse me, the fact that we kept on, we broke here. Okay. We had another break right here, which here, all right, as a break of structure on the low side. All right. And we got what's called an inducement right up in this area up in here. See how we had our order block that had not been mitigated yet. Price came up, people started selling. Now, on the 4-hour chart, these are some good sales. It's a lot of money up in there. But if you want to wait for the real sell, this was it right here. All right. And we broke structure. We changed character, then we broke structure once, broke structure twice. We're going to look for an area where price may come back to. Okay, so how do we do that? We look for our premium and discount zones. All right, so check this out. Those of you that don't know how to find premium and discount. Now, we all know when you're selling something, you want to sell it at a premium, right? So the premium is the highest possible price that you can sell it for. And when you're buying something, you want to buy it at a discount. All right. That's the lowest possible price. And that's why you always hear traders say buy low and sell high. That's what they mean. Buy at discount, sell at premium. All right. And if you take your Fibonacci and put it on and you get your 50%, put it on your range, from your high of your range to the low of your range, right? 50% of that, this is fair value. This is like fair price right up in here. 50%, that's fair price. Anything above is premium. Anything below is discount, right? So we know that price is coming down. All right. So as price coming down, we're looking for sales. So we want to sell from premium. That means we're going to look for an area above this 50% up in this premium zone up here. Let me just type it up quick. Type it in there right quick. Premium zone. All right. And then we have our discount zone. Okay. All right. So we got our premium zone at the top, and we have our discount zone at the bottom, right? So we know that we're selling, we know we want to sell somewhere premium, okay? But where precisely? Because we don't know where, a certain area. So looking at this, we can see that, okay, we have this little small gap here. Now, the higher up that we go, the better the sell you're going to find, all right? So looking at this, we have several areas of interest that we got a little small gap here, but I don't think that's the one. I'm looking at somewhere over here, somewhere between this gap right here and this order block right here on this bearish engulfing. Now, something I want you guys to see. All right, this is a little cheat code. Let me show you something right quick. My Fibonacci's. I'm going to change my Fib. I could have left that one on. Hold on a second. We're going to redo it. All right. Now check this out. I learned this from a guy called ETM Effects right here on YouTube. Fair price. Okay. Remember I told you 50% was fair price, right? 50% is fair price. This is 50 right in the middle. All right. So price, this area here, this lighter or brighter shade right up in here, you can also consider this fair price area. All right. Now, once you get up here, this is where the real premium is, right up in there. So let me just tag it again. Premium zone. All right. And then this bottom, discount. This is our real discount zone. All right. So, so we can look for price to go up here. And like I said, what do we see? We see this gap right here, right? And we see this order block. So we can look for price to come somewhere up in here. All right. And what I'm going to do is I'm going to tag this order block. I'm going to tag this candle this back. Now, this is a 4-hour chart. We will go down and try to refine it a bit. All right. So I'm going to do that. I'm going to delete my fibs. All right. Because I want to try to whittle it down a bit. All right. So now that we have that, now let's go down to the 2-hour. All right. See if we can get it down. Look. See right there? Okay. So now we can make this candle just a bit smaller. Okay. So now, boom. Okay. So now let's go down to let's look at the 1 hour. See what the 1 hour looks like. Okay. Same candle, 1 hour. Got the gap right here. Came down all the way down. Break a structure. All right. Even right here. Boom. We broke this structure right here, even though it's gap. All right. So we can probably expect this to come up and fill the gap and then start coming down. Okay. Now, something I want to show you guys, because although I have this up here, it's possible that it may not go all the way up there. There's another Fibonacci setting that I have. Check this out from the higher range, lower range. I'm going to give you guys the settings on those. First, I want to look at Smart Money Fibs 2. Okay. So according to my Smart Money Fibs 2, see this gold area here? This is my potential reversal area. Okay. And looking at it, we could say maybe here, right here, maybe, or perhaps fill this gap up in there. All right. And there's another one that I use as well. Smart Money Fibs 2.2. It goes a little higher. And see it when it goes a little higher, look at what we got. See this yellow line up here? In between it, look, we have our gap. And this yellow line is almost equal to where our zone is right up here. I mean, our order block there. All right. So that's probably where I would be expecting price to come to, this order block up in here, and then give us a sell. All right. So what I'm going to do is I'm going to put my short position tool on. All right. I'm going to aim for my stop loss. Now, when you do your stop loss, you can put it a little bit above just to give it a little bit room. All right. Okay, so that's about 28 pips. 28 pip. Yeah, that's about a 28 pip stop. And my target is for, I aim for structure. I aim at the low. Because remember, we keep on breaking structure, right? So if it's a downtrend, if it's a true downtrend, we can expect this structure to get broken. So we can put our target right down there. All right. And that's a 1 to 6.85 risk to reward. It's about 197 pips. 197 pips profit, 28.8 pips stop loss. All right. Now this is the DXY. You can trade the DXY if you want in your Forex account. I normally don't. I just use the DXY for to see what the dollar index, to see what the dollar is doing. Right. So that's what I'm looking at. The dollar's going up and then coming down. So, all right. So, and now this is, like I said, I use the DXY to see what the dollar is doing. And the way I do that, let me stretch this over just a little bit. All right. Because I think this might take some time to get back up. Maybe around the end of the week, it might get up there. All right. So the way I use the DXY dollar index, if the dollar index is going up, any pair that begins with USD, look at that, see, should be doing almost the same, something similar. Look, USD CAD, DXY. Now notice I said almost similar. All right, DXY, see how it's coming up right here? All right, USD CAD. All right, see how it came up, see how it's coming up right there? All right, the next one I want to look at, USD Chef. All right, coming up, same thing, same as DXY. All right, coming up. UJ, coming up. All right, UJ, coming up. Now, all the moves aren't exactly precisely the same. All right, but these do begin with USD, USD. All right. Now, on the flip side of that, the pairs that end with USD will be moving in the opposite direction. Let's look at AUD USD coming down. See that? DXY coming up here. AU coming down here. Okay. Euro USD. See? Coming down. DXY coming up. All right. GBP USD coming down. All right. GU coming down. Dixie coming up. All right. And I don't have NZD USD. And even gold. Now you got to be careful with gold. See, I could have had a nice trade on gold from up here. But I didn't take it. I wasn't quite sure. But look, see how it tapped my big zone and it tapped my smaller zone right here. And then look, see this? See the Fibonacci that I have on there? Hold on one second. The Fibonacci setting I have, it tapped right into it. And that's my 2.2 Fibonacci. All right, 886 and 718 is my golden area. But look how this has been dropping. Even it tapped my smaller zone right here. See that? I mean, tapped it, boom, hit it down. All right. I wanted to show you guys that. But gold, a lot of times gold move in the opposite direction of the dollar. Sometimes it has its quirks, like every pair. Every pair has its quirks where, you have the correlating pairs. Sometimes the correlation might be a little bit off, but I mean, for the most part, it'll follow. And then you have the pairs that move opposite, like gold. All right. So knowing the direction of the DXY, you can trade just about any USD pair, no matter what direction the DXY is going in, right? Going in the direction of the DXY, you have to know. I mean, it helps you trade any USD pair. Okay. So you can probably catch this coming up. Me personally, I like the big trades. So I would probably wait. I'll probably wait until it get up there, or wait for a pullback and then get up in there. All right. But the DXY, if you do trade it, I would wait until New York, probably stock market open. All right, somewhere around there. But that's what I wanted to show you guys. How I use the DXY to find my USD trades, my gold trades. US 30, my favorite. All right. Now I've been trying something with US 30 with volume. Actually, I've been trying with all indices with volume. And I'll let you guys in on that a bit later. I did make a video on it a while back, but I think I have to refine it a little bit. All right. But next time I will show you guys this. I hope you enjoyed the video. If you like it, please give me a thumbs up. Don't forget to subscribe, share it with about 100 people. Share it. Show some love. If you want to learn to trade with Black Diamond FX, hit me up. Email me, blackdiamondfx@yahoo.com. Follow me on Instagram. It's at blackdiamond_FX. Hold on. I'm about to type it for y'all right quick. Email. Oops, my bad. Email blackdiamondfx@yahoo.com. Instagram at blackdiamond_FX. All right. Boom. There you go. Don't forget to follow me, subscribe, like, comment, share with 1,000 people. If you guys want to learn to trade, just hit me up, email me. All right. Oh, my website as well. Hold on a second. Let me show you guys that. Let me see. This is my YouTube. Go subscribe, man. ZM Capital Price Cycle. Dude, real good. Guy that I watch a lot. All right. And my website. Y'all guys can check out my website. It's free. I got the free version right now, but I will be upgrading to where you guys can go on and pay for my services or whatever. All right. You can go to the contact us page once you're ready. Drop us a line, name, email, message, tell us what you want, and we will get back to you. Okay. Services, lifetime membership, 1,500. I'm thinking about going down on this. Let me know if y'all want. If y'all want me to go down, let me know. All right. One-on-one. If you only want one-on-one, boom, 500. And I'm working on a self-study course as well. All right. Have any questions? Click the box. All right. Thank you guys for joining in. I appreciate it. Show some love. Don't forget to subscribe. Click the bell, comment, share. I'll let y'all later.